Good day and welcome to the Supreme Petrochem Limited Q4FY23 earnings conference call. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Petrochem Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Petrochem Advisors. We represent the investor relations of Supreme Petrochem Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Rakesh Nair, Executive Director and Chief Financial Officer, Mr. Dilip Deole, Chief Executive of Finance and Accounts, Mr. D.N. Mishra, Company Secretary. Now I request Mr. Rakesh Nair to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good evening, everyone. It's a pleasure to welcome you to our first ever earnings conference call for the fourth quarter and financial year ended 2023. Given that this is our first earnings con call, in the interest of some of you who are new to the company, let me first start by giving a brief overview of the company. Supreme Petrochem was formed as a joint venture between Supreme Industries and Rajan Raheja Investments. It started commercial activity in October 1995. Company is the leading manufacturer of polystyrene and expandable polystyrene in India. In polystyrene business, we have a market share of about 60% and we are the largest exporter of polystyrene from India. We forayed into expanded polystyrene in 2006, and since then we have also become the market leader in this segment as well. Company's other products include master batches and compounds and extruded polystyrene and XPS insulation foam boards, which is used for the green buildings and for insulation purposes. Company is further enhancing its product range by setting up a new mass ABS plant, that's the mass acrylonitrile butadiene styrene, in technical license from Messrs. Versalis of Italy for its production with low carbon footprint. Company is today well placed to benefit from the expected pickup in the domestic consumer durables and automobile sectors. It has a strong balance sheet with zero debt, and we are funding our capex of about 1,200 crores without any external borrowings, all from company's own funds. Now let me brief you on the financial performance of the fourth quarter and then for the full year ended March 2023. The operational income for the quarter was Indian rupees 1,317 crores, which declined by about 7% year on year and increased by 17.5% on quarter basis. EBITDA reported was rupees 209 crores, which declined by 32% year on year and increased by approximately 76% quarter basis. And the EBITDA margin stood at 15.06% for the quarter. Net profit reported was rupees 160 crores, which declined by 29% year on year and increased by 78% quarter on quarter, while the PAT margin was 11.52%. This decline in revenues and margins was primarily due to reducing global deltas between the price of raw materials and company's product price. Coming to the financials for financial year ending 2023, the operational income for FY23 stood at rupees 5,287 crores an increase of 5% compared to FY 2022. Operating EBITDA stood at rupees 658 crores, declining by 27% year-on-year, with EBITDA margins reported at 12.45%. Net profit stood at INR 498 crores, declining by 25% year-on-year, with PAT margins at 9.42% during FY23. On the operational front, total sales volume of the manufactured products increased by 17.8% in Q4 FY23 over the previous quarter, and increased by 4.8% in FY23 over the previous year. Domestic sales on sequential quarter-on-quarter basis increased by 17.9%, while broadly remaining static on year-on-year basis. Price of styrene monomer, which is our main raw material, have remained stable since August 2022. They have moved only in small range there. On the capex front, our brownfield expansion projects for enhancing existing polystyrene and expandable polystyrene capacities at company's Amdoshi plant, Raigad, and at EPS capacity at its plant at Tamil Nadu are now complete. Company's effective capacity for polystyrene now stands at 300,000 tons per annum, and expandable polystyrene capacity now stands increased to 110,000 tons per annum. The first phase of mass ABS project with 70,000 tons per annum capacity under license from Versalis is progressing as per schedule. Company plans to incur about rupees 430 crores in the current year on ongoing ABS project, EPS second phase expansion, and extruded polystyrene foam board second line, apart from the normal capital expenditure. Lastly, the board recommended a final dividend of rupees 7 per share. With this, we can now open the floor for the questions and answer session, please. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask question, please press star 1 now. Take our first question from the line of Aditya Khetan from Smith's Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity, and congrats for a good set of numbers. Sir, first question is onto the utilization of the polystyrene and the expandable polystyrene capacity. So what was the utilization for the current quarter, and what is the expected timeline of peak ramp-up of these two projects which we have funded the capacity?
For the year 22-23, the capacity utilization for both polystyrene and expandable polystyrene were above 92%. Since our new capacities have just commenced in the month of March, going forward in the current year, we hope that as far as these new capacities are concerned, they would be utilized to the extent of maybe 60%, and gradually they will ramp up.
So 60% for FY23 and for FY24, and then it would be gradually.
That is the new capacities I'm talking about.
Okay. And sir, how much would be the trading revenues in 2023? Like in FY22, sir, it was around 25%. So similar, how much would be the figure in FY23?
Our trading revenue for the year 23 is around 22 to 23%.
Okay. And so this will remain stable for the next coming years? So around 20 to 25%?
Same range.
Into the same range. Okay. So the quarterly jump in spread of polystyrene and all other segments, so that has been quite phenomenal. So just I wanted to understand what has led to such steep rise in the spreads on quarter-on-quarter basis. Is there any fundamental change into business which has led to such steep rise into the spread? So whether the demand has gone up or some capacity globally has been shut, so because of that your exports have gone up. So what has actually changed, that I wanted to understand?
See, January to March quarter is generally the peak quarter for the consumer durables. That is the time when they start building up the product for the sale during the summer months, the refrigerators, the air conditioners and all that. So there is a demand pickup always which starts from the second half of the second fortnight or the second half of December till March onward. So the January to March quarter, always the demand is better. And that is the reason this time also when you compare quarter-on-quarter basis, the sale has been better. As we said, the sale was almost 17% better than the previous quarter. So it is the OEM demand, it is the seasonal demand which always comes up in the January to March quarter.
Okay, so this demand, sir, wouldn't be there for the next 2 quarters at least from here on. So can we expect that to normalize?
No, the next quarter, that is the April-June quarter, yes, that is the first quarter of the 24, because there in May in any case the demand is good and then June it starts tapering off. And then after once the rain starts, the demand slows down a bit, and once again when the festival season starts, the demand picks up of all these OEM products. So the demand it moves along with the OEM demand and the need there.
Okay. So with such huge capacity expansion which we had lined up, so apart from the ABS business which will come by 2025-26, so apart from that, so what is the management guidance in terms of top line and EBITDA growth from the core businesses like from polystyrene, APS, XPS, SPPC?
Can you repeat your question? It's not clear.
Sir, my question was onto the top line and EBITDA growth for the next 2 to 3 years, apart from the ABS business, which will come by 2025-26. So excluding that, so from the core businesses, how the growth would be for the next 2 to 3 years, EBITDA and top line?
Top line, I can comment. The top line growth will come from the volumes. Now with the new capacities available to us, the volume growth will happen. And as far as the EBITDA is concerned or the margins are concerned, that they are linked to many external factors. So though like in the year 21-22, the margins were very high because of the disruptions in supply chain, very high freight rates. So now the deltas between the styrene monomer and the finished products, they are at very normal levels. So the growth will come from the volumes.
Okay. And sir, any sort of number like 10, 12% or 15% growth which we are anticipating?
I will talk in terms of volume. The volume growth, what we are anticipating in the year 23-24 is around 15 to 16% over the 22-23.
15 to 16%. Okay. So the last question onto the CAPEX. You had given a figure into your opening commentary. What was the figure for FY24 and 25, and what is the maintenance CAPEX for this year and we can build for the next 2 years?
This CAPEX number which I gave you includes the maintenance CAPEX and also the ABS and the EPS second phase as well as the XPS second line. 24-25 also the similar expenditure would be there.
So 450 crores, sir. That we can build in?
430 is the number I gave for this year.
Okay. 430. Thank you, sir. I'll get.
Thank you.
Thank you. In the interest of time and fairness to all participants, ladies and gentlemen, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We take the next question from the line of Sailesh S from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. In last 2 years, a lot of capacities has been added in styrene monomer in China. So this eventually will push more capacities in the downstream products like polystyrene and EPS. Now China is also opening. So do you still expect market to balance out? So basically wanted to know what are the factors in your view will be supporting for the company to sustain or improving the profitability, sir?
China has become surplus, or they are becoming self-sufficient as far as styrene is concerned. China, over the next couple of years, is planning to add, or they will add around 3 million tons of polystyrene. But then China's earlier imports of polystyrene will slow down, and China's own demand is also likely to grow, as per the market reports and research reports, is likely to grow by almost 5 to 6% per annum. So the styrene is there, the downstreams will also come in there, but then the demand is also growing. So we don't anticipate that there will be any impact as far as the Indian market is concerned. Indian market is also growing, and we expect that the Indian market will also grow in line with our GDP. It will grow as far as the polystyrene and expandable polystyrene is concerned. The styrene, as far as styrene is concerned, China is adding almost 10 million tons, and China is right now maybe a small importer, but then eventually it will be fully self-sufficient. And that will help ease out the styrene availability for the Indian consumers, which is good for us.
Okay. Sir, as you always say, more than delta in PS and SM, payback period is the key internal metric you always look at. So mass ABS we are going in 2 phases, and total capital we are going to deploy around 350 crores. So what is the payback you are looking, sir, and how many years it will take for us to fill the capacity 140K?
The mass ABS, we are investing 850 crores for both the phases. That is the 2 lines of 70,000 tons each. So right now, currently we are progressing with the first line. For the second line and its configurations, we are currently still discussing with Versalis. And the mass ABS will be a new product for Indian market. And what we expect is it will take us almost 2 to 3 years to ramp up the capacity and come to the rated capacity of the plant. Our calculations are that once we reach the 90% capacity utilization, we should be able to recoup our capital cost in less than 4 years or so.
Okay, great, sir. Sir, how much trading we have done, sir, in ABS last year, FY23?
I'm sorry, I won't be able to give you that number.
Okay. Sir, one last question. So in the new PS and EPS capacity, so according to you, you said maybe 2-3 years we can fill the capacity. What is the payback you are expecting here?
Yeah, around 4 years again, please.
Okay. Okay, sir. Thank you, sir.
Thank you.
Thank you. We take a next question from the line of Neeraj Maratha from Sentinum Research. Please go ahead.
Hello.
Please go ahead.
Yeah, good evening, sir. I just wanted to understand the difference between the mass ABS route of production versus the normal ABS route of production in terms of the capex as well as in terms of the application. So for the mass ABS, are the applications lower than the normal ABS from a technical point of view? If you can just provide some details on that.
Mass ABS is a continuous process ABS, whereas the conventional ABS is it's a kind of a batch process where you produce your high graph rubber in one stage. The second product is sand, and then there is a compounding done with all these 2 products with other things, and that's how you get your conventional ABS. Mass ABS has the advantage that it is a continuous process directly from the reactor, has low carbon footprint, and also the utility consumption or the manpower consumption and the overheads would be lower than the conventional ABS. As far as the end users are concerned, end users are the same. Globally, it is rather a premium product today, and wherever the conventional ABS can be used, the mass ABS can also be used.
Okay. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Abhishek G from Alpha Investco. Please go ahead.
Yeah. Am I audible, sir?
Yeah.
Thank you for the opportunity, sir. So my question was regarding mass ABS. So we roughly India consumes around 250,000 metric tons, and if we put together all the three players, combined capacity and the import, so we sort of at over capacity utilization. So how do we see this panning out, or are we completely substituting imports?
Yes. Now, the last year imports are estimated, that is the FY23 total consumption is estimated close to 300,000 tons of ABS in India, of which almost 45% is imported. And our total capacity of both the phases put together is 140,000 tons. And by the time we implement this project, the demand will grow. And we estimate that the demand of ABS with the increase of the automobile consumption and EVs coming in place, the demand will grow at around 5 to 6%. So the demand for ABS will be far excess of the total capacity available in the country, even when we come with both the lines.
Understood.
So the imports will be substituted, partly the new demand will be met.
Okay, understood. Just a follow-up on that. So globally, roughly 90% capacities are in emulsion ABS and 10% in mass. So why have we chosen mass over emulsion? The end applications are similar.
The end applications are same. This technology is closely guarded, as well as the old plants are all on the emulsion basis. It's the new capacities which are, and those who get the technology are setting up the mass ABS. Mass ABS has the advantage of low carbon footprint, and also, as I explained earlier, the mass ABS has an advantage in terms of the utility consumptions and the manpower consumptions, and since it's a continuous process, it's a safer product.
Okay. So roughly, mass ABS margins can be better than emulsion ABS, right? So do we see any sustainable margin profile with mass ABS, or what is the sort of guidelines of it?
No, see, the selling price remaining the same. The conversion cost may be lower in the case and will be lower in the case of mass ABS.
So margin profile definitely.
Yeah.
So when we took the mass ABS project, any sort of margin aspiration we kept, or it will same be like?
Is the global price. The all commodity and all polymer prices are benchmarked with the global landed prices. So whatever are the global margins would be available to us also.
Understood. Thank you, sir. I'll get back.
Thank you. We take the next question from the line of Ravi Mehta from Deep Financials. Please go ahead.
Yeah, hi. Thanks for taking this call. My question is on the spreads. When I look at the data available, the commodity spreads are coming off, but the company's performance has been quite better than what the spreads indicate. So are we having some cost plus kind of contracting in place or some long-term arrangements, or how are we able to outperform the spreads what we see in the published data?
See, the published data are generally of the very standard commodity indices. Now we have moved on and added many value-added grades where we get some premium. That is the one. Secondly, our costs have been managed well, and our raw material sourcing is also managed well. So those small savings here, they always add to our margins then. And plus the premium value-added products give us better realizations.
Overall basket?
Sorry?
What would be the share of value-added grades in our revenues?
Our value-added grades are close to almost around 37 to 40% now.
Okay. And what was it like 3-4 years back?
3-4 years back, we were around, I think, 25 to 27. But again, we have whatever grades we were then we have improved upon them and commanding a better premium there.
Okay. And those are not like can't be imported or meaning there is some edge in those grades.
If you look at the import data, you will find that the imports happen at an X price and also X plus $200 also. So there are various grades, various recipes. It depends upon that what is being imported and what is the requirement of the customers here. So the imports can be done, not that they can't be done, but they'll be at a price altogether, not at the published price what you are seeing then.
Sure. And on the raw material side, what kind of raw materials we are importing from China? Or
we don't import raw materials from China. Our imports of our raw material happen from Korea, Singapore, and the Gulf.
Okay. And is it that Chinese imports are beneficial, or you're trying to stay away, or any reason?
No, we're not trying to stay away because China has just started the styrene capacities there, and China is still not exporting styrene,
okay,
except maybe a few parcels here and there, but they are not a regular exporter of styrene yet.
And lastly, the volume data that you share in the presentation, is it only pertaining to the manufactured volumes, or it includes the trading volumes?
No, it is only the manufactured volumes.
Okay. And the trading element in revenues, 22 to 25%, is it like a steady state across quarters, or it keeps varying quarter?
No, it's almost it's steady generally. It's steady.
Okay. And that would have a small trading margins like 4-5% or 2-3%?
The pull down our EBITDA margin, if you look at the margin to the total revenue, because margins there are very narrow, but it is only since we have the necessary infrastructure built up to handle styrene monomer. So the other consumers of styrene monomer in the country, they prefer to source it from us because they are saved of the hassles of one procurement and also the handling it at all places.
Sure. So can we make like 4-5% trading margins on that EBITDA level?
No, it depends. It can't really say 4 or 5 or 3, but then it depends quarter to quarter, and it's only the volumes remain generally steady, but the margins will differ there.
Okay. Thank you. I'll come back in the queue. Thank you.
Thank you. We take a next question from the line of Rushabh Shah from Anubhuti Advisors LLP. Please go ahead.
Thank you for the opportunity. So just, first question was with respect to the brownfield expansion we concluded. So wanted to check the new capacity has been operational only from the month of March?
That's right.
Okay, because the consent to operate was received in the month, I think by the end of December itself.
So the consent was received only on the 30th or 30th December.
Okay.
And by the time the plants are stabilized, and so it has started from March, so the stabilized production is concerned.
Okay, so in terms of, I just wanted to understand the inventory value. I think for as of 31st March was way higher at 600 plus crores. So any specific reason why we have built up higher levels of inventory?
There are two elements in that inventory. One is the raw material inventory and other is the finished goods inventory.
Okay.
The finished goods inventory is, as I said, that the productions, the new lines production started from March onwards. So that has added to the inventory, and the raw material inventory has gone up because we had some bunching of shipment arrivals in the month of March, and that has added to the raw material inventory.
Okay. And I think our objective largely from the new capacities is to tap the export market, correct?
Tap the export market as well as feed the increasing demand in the domestic market also, because last year in the domestic market during the peak months we were not fully able to meet the demand and there were imports. So we will be meeting that demand in the domestic market apart from the general growth in the demand also.
Okay. So just in addition to that, can you share the export data for maybe fourth quarter and for complete FY23? Export volume data.
Our exports last year have been closer to almost, the total exports were close to 8% only of the total volume.
Okay. And in terms of the prices, I think raw material prices have largely remained same since August, and even I think spreads have largely remained in the narrow band. But I think post March, is there any movement in the prices? Have those improved, or are they still stable at those?
They are in the same range. There are no changes there. The prices move, of course, always, but in a range of the raw material prices have moved, but then they are all in a band, only 5 to 6% here and there. So generally, they have been very stable, very, very stable.
Okay. And in terms of, I think our capital allocation policy, I think that I wanted to understand. So now, while we are targeting some 800 odd crore plus capex over the next 2 financial years, so is that the reason why we are building up larger cash reserves in the books, or is it our stated policy that we continue to maintain cash balances at higher level?
No, we have no such policy of keeping higher cash in the books of the company, but now we need that cash in terms of our capex, planned capex, and we, like last year also, we used the cash to reduce the capital, and a year before that we used the cash to do the buyback of shares. So, and a certain amount of cash is essential in the books of the company, because we are also, you must appreciate that we are in a cyclical industry.
Absolutely.
Cyclical industry, always to have a cash cushion in the company is helpful.
Okay. So, basically any plans of buybacks in the current fiscal or higher dividend policy which you are envisaging as of now? If you can guide.
Board's decisions, I can't comment on them.
Okay. So nothing as of plan, just wanted to get an update on that.
Stock exchange में खबर चली जाएगी.
Absolutely, sir. But just wanted to check, do we have any such policy which that we will be doing that every year, or just wanted?
It's the prerogative of the board. They keep on reviewing. Whenever they take a call, it will be known. I have nothing to say on that. Sorry.
Perfect. And just one last question, sir. In terms of exports, which all geographies will be targeting with these new capacities, if any?
We have been exporting to practically over. Earlier we had customers over 110 countries, and since in the last 2-3 years our exports were in hibernation. So we are reviving our old customers, and in any case, last year itself, whatever exports we have made it to Africa, Europe, Gulf, Iran, and neighboring countries like Bangladesh. So, but then we will be, and North America also we have customers. So we will continue to concentrate on those. And we have customers in South America, and as far as Hawaii also we have customers. And so we have customers in Asia, we have in Europe, we have in Africa, we have in Americas. We have to once we have the capacity built up now available, so we have to again go and market, nothing else.
That's great. I think that was all from my side. Thank you so much, sir, for the opportunity.
Thank you. We take the next question from the line of Sandeep from East Lane Capital. Please go ahead.
Yeah, hi Rakesh. 2-3 questions. If you could give us just some sense on what's the contribution differential between a commodity polystyrene versus master batches, EPS, XPS. Just broad sense, what's the contribution differential?
They are not comparable, very frankly. They are not comparable because master batches are a different thing there, and the compounds are very different. They are a alloy of many polymers there. So again, in a compound business, the product can be the pricing could be as low as 100,000 rupees a ton to even 250,000 rupees a ton. So it varies. So it's very difficult to compare anything between the margins of each vertical. Each vertical has its own flavor, and they have their own standards in terms of margins. And within each vertical of polystyrene, we have 14 grades, and each grade has a different kind of margin. And when we are in value-added grades, they have a different margin. If I have there is a grade, I'll tell you, which we call as the ESCR grade, that is environment stress crack resistant grade, which is used inside the refrigerator. And it's a very premium grade. Or the grade which Gillette uses for making the razors, that's a very premium grade. So those values and their margins are very different. So there are no standards there. So your question I really can't answer.
So what would be the contribution differential between value added, which you mentioned 47-48% versus
47-48? I said 37 to 40%.
Sorry, yeah, 37 to 40%. What would be the differential if X is the margin for commodity, value added would be 1.5X, or just broadly to get a sense?
If the margin is X, the other one could be another 25-30% more than that.
Understood. And over the next couple of years, where do you see these value-added products contribution from 35 to 40%? Could it be 50-50 or?
Our efforts are on, but very difficult to say. It all depends upon the demand also. Our efforts are to move up in the value chain.
Understood. And last question, construction industry is a huge consumer of EPS and of course XPS globally. In India, what would be the triggers? Where do you see construction demand coming for these products over the next, I don't know how many years, or how do you see that evolving, or what are you doing to make that industry consume more?
See, as far as EPS is concerned, the last year the consumption in the construction sector was only the whatever we sold was around 10 to 12%, whereas globally the consumption is in excess of 50% also in some places. So India has a lot of scope as far as EPS consumption in construction is concerned, the road building is concerned, but the processing units which are needed for making 3D panels or sandwich panels for construction, they have still not come up in big way in India, and those who are there, the old ones, they have their own constraints. So this is one area that is actually causing not the stopping the growth in the construction industry of EPS. As far as XPS is concerned, yes, all institutional projects, that is the educational institutions or malls or the hospitals or the all government projects, they continue to use the XPS, and that is why from a zero now it has taken us so many years by doing the road shows and spending so much of money on the road shows. and educating all segments of the people involved with the construction industry, including students in the architecture colleges or the waterproofing agents. Everybody we have tried to educate and show the benefits of XPS. And now we are seeing that there is some mass. And looks like, yes, the product will catch on in the coming years now. It will grow now.
Understood. And how do you reach that inflection where more of these are used in construction? I understand what you just mentioned about ecosystem not being there. But if the advantages are there, when do you see the inflection? Because that could be a massive demand driver.
If government mandates, then like many countries, Europe has it's mandatory to use XPS board. Your Middle East has it, China has it now. Even if you want to go and upgrade the building or repair the building, in Europe you don't get permissions unless and otherwise you agree to do insulation of your building. It's not that necessarily that you use XPS board, any other insulation product also. So it has to be used. In India, that mandation has still not come.
Understood. Thank you very much.
Thank you. We'll take the next question from the line of Atur Shah from ICICI Prudential AMC. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, on PS or ABS, any ADD or any duties, etc., for imports within India?
Sorry, come again?
For PS or ABS, any ADD or any import duty, etc., that we have for imports coming to India?
On ABS, currently there are no anti-dumping duties. As far as polystyrene is concerned, DGTR had recommended 2 years back some duties, but then they have still not been levied by the Ministry of Finance. So currently there are no duties.
Sure. And just one more, so just based on your past experience, where do you think in the cycle we are in terms of, say, PS and maybe ABS, both these products exactly?
Can you repeat your question? I am not able to...
Sure. No, I'm saying based on your experience, where do you think we are in terms of, cycle, in terms of both PS as well as ABS?
Cycle, okay.
Yeah.
I think we are very stable at the moment. The Indian demand is growing. And as far as India is concerned, we are at a steady cycle right now. I won't say that I'm looking at any slowdown there. It's stable.
It would be fair to assume we are somewhere in between, basically. We are not either at bottom or top, basically. Since we have capacity coming in, that's why I'm asking.
Yes, no. As far as our polystyrene capacity is concerned, considering that last year we were unable to meet the demand in the country, the imports had to take place, and whatever capacity we have built up, at this part of that imports we will be able to supply, and partly we will be exporting, and there is an export demand available to us. And ABS is still year and a half, 2 years down the line for us. But then, as I see, there is a lot of traction for ABS because of the EV industry growth, automobile growth happening. There is and appliances growth also, small appliances growth happening. There is a demand for ABS. That is the reason the last year almost 140,000 tons of ABS was imported into the country.
Sure. And anyone apart from us adding capacity in both these products? Large ones, maybe within India or...
As far as India is concerned, I am not aware of anybody else adding polystyrene capacity because currently there are only 2 players. We are there and Styrenix Performance Materials is there. And as far as ABS is concerned, again, Styrenix is there and Bhansali is there. So if they are doing some revamp or adding some small capacities, yes, maybe, I'm not aware. But the new large lines are not being implemented. We haven't heard of it.
Thank you. We'll take the next question from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, actually, I'm new to the company, so please pardon my ignorance. I just wanted to understand that our operating margins used to be in mid-single digits till COVID, and thereafter they have more than doubled, and now they are in double digits. So is this only due to the shutting down due to accident in LG's plant in Vizag, or is it that the international spreads have increased, or is it some inventory gain that is there in our numbers, or a mix of all these factors?
Now, when you say the two things have helped. 21-22, the international deltas were high. That was, I'd say, they were very healthy, and because of the very high ocean freights, disruptions in supply chain, and there was some plants they had shut down during COVID, or they were non-operational for some reasons or the other reasons. So there was a very high delta available. So 21-22, that was the reason of the high margins. As far as the 22-23 is concerned, the deltas have all come back to the normal, and our numbers have gone up. Our numbers are now better than what pre-COVID levels are there because of the increase in demand, and also our volumes have increased substantially. That has helped us.
So basically these margins are sustainable, and shareholders can expect this kind of 12% double-digit margins to sustain?
As on date, the way the global margins are, or the international prices are, yes, they are similar, and what they have been last 9 months, they are there. So going forward, what happens globally, I can't predict.
Sure, sir. And sir, also any chance or plans of our competitors' plant starting up, LG Chemicals?
See, their matter is currently sub judice, so what happens there, I can't comment unless otherwise the court cases are decided or the court takes a call. It's very difficult to comment on it.
Sir, and so in terms of percentage, what percentage of domestic demand is being catered to by imports?
Last year, all the 1 year when the demand was good and the domestic players were not able to meet the capacity demand, the imports increased in the year 22-23. And last year's number, if I see, there almost 20% of the country's demand was met through imports. But prior to that, always the imports have been in the range of 8 to 10% of the total consumption of PS in the country. As far as EPS is concerned, there are very negligible imports.
Thank you, sir. We take the next question from the line of Aditya Khetan from SMIPS Institutional. Please go ahead.
Sir, thank you for the follow-up. Sir, during the current quarter, sir, despite an 18% jump in top line, the employee cost and other expenses have declined. So is there a one-off, or this is a sustainable rate we can take for the coming year?
Come again, Aditya. आप क्या कह रहे हैं?
Sir, during the current quarter, there is a 17% jump in top line on quarter-on-quarter basis. But your employee cost and other expenses have declined. So is there a one-off? And
see, that happens if in a particular quarter, if there is some performance bonuses or some arrears go up, so when you are comparing employee cost, so that can change depending upon the whatever which month we have given the annual increments or bonuses. So, but then on an annual basis is what you should look at the employee cost.
Got it. And sir, generally, in which quarter we generally take a maintenance shutdown for PS, EPS, and XPS?
There is no such definite call, depending upon the demand and we decide to take a shutdown. And secondly, it is not that all the lines are shut down together. We shut down line by line so that majority of the capacity is always operational for us.
Thank you. We take the next question from the line of Harsh Shah from HSBC Mutual Fund. Please go ahead.
Yeah, thank you very much. So, sir, just two questions. Firstly, on the end user industry, you mentioned about demand picking up from sectors like consumer durable, automobile, etc. For our company right now for FY23, can you just help us understand what has been your revenue breakup in terms of end user mix? How much of that was going through various industries?
Sorry, I don't have that information with me here at the moment. I'm sorry. I can only see the OEMs, their demand which was there. That OEM demand grew last year for us by almost 15%.
And how much would be a total sales mix into OEM, sir?
It's almost 50-50 for us.
Okay. And in next year also, when you mentioned that there will be a volume growth of 17%, irrespective of where the prices will be, the 17% has been catered through both of the segments, or is there one segment that is seeing a higher demand?
What I've said is the total volume growth will be around 17%. That includes our exports also and the domestic sales also. And it includes both. It is for the OEM and the non-OEM, both sectors.
Understood, sir. And just last question from my side, in terms of the demand that is seen in this industry, in terms of new avenues or new demand creation drivers, where can you see a new demand coming for our company, which has not been there previously? One thing that you mentioned was EV. Is there anything else?
The other areas could be the smaller appliances.
Okay. Anything else?
No, I don't recall anything else at the moment.
Okay, sir. No issues. Thank you very much and all the very best.
Thank you. Participants, please restrict questions to two per participant. We take a next question from the line of Shailesh S. from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity again, sir. Sir, what are the go-to market initiatives we are taking to expand the market in XPS product? So if you look at in southern region, so as per my distributors' feedback, our XPS penetration is good in Kerala and Andhra state, but low in Tamil Nadu and Karnataka. So what marketing initiatives we are taking, sir, to improve the awareness of XPS product?
I'll say that your market report is, first I must appreciate that, is very, very good. You are right, absolutely. Kerala is a good consumer of XPS. And Tamil Nadu, though we are making all efforts there, but it's still not picked up in Kerala. See, and it's something very strange. The row houses are taking XPS in Kerala, but the row houses are not consuming XPS in Tamil Nadu. So we actually have been making all efforts, as I said earlier, that I think we have spent more money on the road shows as far as marketing XPS over the years is concerned than we initially put money into the project. We have made the road shows not only to the contractors, the architects, the interior decorators, the waterproofing agents, the students, and then we also ran a course in these few architectural colleges on insulation. So that is the reason that over a period of time, it has from zero, it has reached some mass for us now, and also to the government bodies. That's how it is there in the PWD's manual also for the procurement of material. The XPS has been mentioned there now, and all government projects are using XPS. But then what happens is that in the smaller towns, the contractors, they find that it is difficult to install perhaps, or they do not have the experience to install it successfully, or the waterproofing agents are not fully equipped to install it. So they shy away and they tell the owners that, look, it will cost you extra money, why you want to put it, whereas not analyzing the cost-benefit analysis to them. And that's the reason all institutional projects are using it, but the single unit houses, the growth there is very small at the moment. Once that picks up, then I think the demand will really boom.
Okay, sir. Sir, with the support from Versalis, like ABS, can you get into more downstream products in future?
See, wherever Versalis is there, we will try and get their support, but very difficult to comment because Versalis may also see where they want to part technology and where they don't want to part technology. But then we are talking to them for some other things to help us, and that will be a continuing exercise for us.
Okay. So one last question. Can you please share product-wise volume data, sir? FPS, EPS, XPS, SMME, and other compounds?
I'll only tell you that our Styrenix volumes as of the manufactured products, they are our revenue line, they almost are 90%, and our master batch compounds and XPS are almost around 10% of our revenues.
Okay. Thank you, sir.